Hello traders, this is Blake Morrow and you are listening to the week ahead video for April 28th, 2019. I am filming this a little bit early since I have some plans on Sunday morning. So I wanted to get this video together for you so you had a good jump start on next week. Before I get started on what developments are taking place next week and what we're going to be looking at, and by the way, it is a jam-packed week of economic events, and we have some pretty big technical developments playing out right now. Excuse me. I wanted to make sure that I mentioned to you, if you haven't tried out ForexAnalytix, remember it's just $1 for 10 days. All you have to do is click right there where it says sign up today, right around here, you can see it. And then once you do that, make sure you download our mobile app. So you're not in front of your computer 24 hours a day. You're probably sleeping 5, 6, 7 hours a day. 8 if you're really lucky. But the good news is when you're out and about and you're not in front of your computer, at least you can have our analysis updates, breach of technical levels, new technical analysis developments, new patterns in play. You can have all that on your mobile device. So make sure you download the mobile app while you're trying out ForexAnalytix. And for those of you that are already using ForexAnalytix, thank you for your continued support. All right, let's talk about some things that are developing and brewing. But before I do that, let me start off by saying that we have a big week. We have the FOMC this week. We have the Bank of England as well, which shouldn't be as big of a deal as everybody's still, I guess everybody's trying to refocus back to the Bank of England right now as we're still waiting for new, fresh Brexit developments. But the BOE is meeting next week. We have New Zealand employment next week. We have Canadian GDP, at which, obviously the GDP for the US was a mover this last week. And then we have non-farm payroll on Friday. So not Canadian employment. Sometimes they coincide, but just US employment data on Friday. So it is going to be a busy week and with a big development in the works. So let's talk about that big development. Let's talk about the elephant in the room. Here is the dollar index. And matter of fact, this is not a fresh chart. Our analysis is still being done by our team over the weekend. What I'll do is I'll take you over to my chart. And then and you'll see this updated on ForexAnalytix probably by the time you're watching this video. But anyway, we talked about this bullish wedge developing last week. Remember? Boom, boom, boom. Consistent highs, higher lows. Chances were higher that we'd break to the upside, and we did. Okay, we did. We have this bull flag pattern. It's in play, points us a little bit higher than where we're currently at. However, we have stalled at the 127% extension. You can see the 127% extension of this last down move. Can you see this down move right here? That last down move produced us to the 127% extension. Now, can we go higher? Yeah, I think we can. And while we're above 97.80 right here, this see this trend line right here? That or that breakout point, okay? While we're above there, you cannot turn your back on the dollar. You can't. All right. We've been consolidating for how many months is this? Let's figure this out. Basically, all right. And we can just start. We're at the top of this wedge. How long have we been consolidating? That is from middle of November. Or beginning of November rather, right? Beginning of November to, current where we're at 6 months. 6 months of a consolidation, and we finally broke out. Now, when you have that much pent up energy in the market, you got to respect it. You do. Yeah, if you're shorting the dollar in any which way, shape, or form, you have to be completely respectful of the fact that the dollar index as a whole is breaking out. Now, just because the dollar index is breaking out doesn't mean you can't short the dollar, because I will show you momentarily that it's not all roses and rainbows and unicorns for the dollar bulls right now. It's not. There are currency pairs that are stand out going the other direction, and they're important that we note those. But if you are one of those people and you're like, okay, well, listen, I'm short the US dollar through this one vehicle, which, we'll talk about those here in a few moments. You just have to be respectful of the fact that the dollar index is still breaking out, and if it's trading above this 97.80, you just have to be watching your six, or watching your back six, in a clock face. 12, 1, 2, 3, 4, 5, 6. 6 is behind you, right? So you got to watch your six. Got to be careful. Keep your stops tight. Trade cautiously if you're shorting the dollar. Now, like I said, it's not all rainbows and unicorns for dollar bulls. It is if you're trading the euro, because the euro is breaking down. You can see the euro here. We broke down out of that bearish wedge, and it looks like we're going to continue lower. And the cable, we broke out of also a bearish wedge here. Okay, you can see the bearish wedge. We broke down, and we're stalling at the 50% retracement. Looks like we could go even further, maybe down to this 127.60 level, which is the 618 retracement. That's entirely possible. But look at currency pairs like the Aussie. Like the Aussie, we're trying to break down, but we had a false breakdown below 70 cents, and then we snapped back. Now that's predominantly due to equities, which I'll talk about here in just a few minutes. But like I said, the dollar is not doing well against every currency. The Aussie is one of them, where the Aussie has already done a little bit of a snapback. Look at the Kiwi. And by the way, we do have New Zealand employment Tuesday night, which will be Wednesday. Well, Wednesday morning in New Zealand. Tuesday night if you're in North America, and then obviously if you're in Europe, it's in the middle of the night and you're probably sleeping anyway. But you can see how the Kiwis had a nice snapback rally. Well, now we are pushing right into what I would call the resistance zone. All right, right here, just around the 67 cents to 67.20. So I think if we're stalling below there, you got to still imagine that the Kiwi is breaking lower out of this bigger, longer term, triangle. All right. But like I said, the dollar is, retracing against certain things. Now, the one currency that you got to, obviously pay a lot of attention to right now is the dollar yen. Now, I'm gonna take you over to my charts really quick, and I want to show you what the dollar yen looks like. And this is important because, and I'm going to take you actually even into a 4-hour chart. The reason why this chart's so important is because this might be telling us a little bit about equities, and which I'll get in the S&P chart here in just a second. So if you look at the dollar yen, the problem was on Wednesday, the yen spiked higher above, 122.20, which was a big resistance. If you were in our ForexAnalytix private chat room, which that's where I spend majority of my day, we were talking about how your overnight interest on your rollover interest on the yen was going to be substantially higher due to the Golden Week, you have triple interest on Wednesdays anyway, but it was going to be substantially higher because of the holiday coming up, and that might have provoked some of the dollar yen shorts to get out, because this all happened just before rollover, late in the day. But the problem with the move like this, is it failed, right? And then we broke down. We broke this, you can see this upsloping trend line right here. So we broke that trend line, and now even the rallies, even following the GDP numbers, respected that trend line. I mean, I know we spiked above it, but we closed back below it, which means the risk is, at this moment, if the dollar yen starts breaking down below, 111.40, 111.35, I mean, things could get a little hairy for the dollar yen. So, like I said, if you're out there shorting the dollar yen, then just keep in mind what the dollar index is doing. Now, can the dollar yen break down, and can the dollar yen break down and then have the dollar index still breaking out higher? Absolutely. And then what you're going to see is a move lower, probably a substantial move lower in like the euro yen and pairs like that. Now, the reason why that could happen is because let me see if the S&P chart has been, yes, it has been updated. So here is the S&P. Okay, now take a look at this. See that we have two ascending wedges. We have an ascending wedge or a smaller ascending wedge inside of a bigger ascending wedge, and the chart looks like this, so I can draw on it. Okay, let's go over to the daily chart. Here we go. All right. Okay, we have an ascending wedge inside a bigger ascending wedge, and frankly, and you guys have heard me say this if you've listened to our broadcasts all week long, as long as we're above 2880, this 2880 level, there's no reason to be bearish. However, if the yen starts to strengthen and the dollar is strengthening at the same time, chances are we're witnessing some risk aversion. So that means that the S&P is probably breaking lower. Now we are still we're still looking out for a potential double top here. I still feel that we're going to break through these highs, stop out anybody who's short before we actually roll over. I believe that to be the case. But like I said, if the yen is strengthening and the dollar is strengthening, I have no other choice than to start looking at the S&P and see if it's going to break down, because that is characteristic of a breakdown. Now, of the S&P turning lower, I mean, risk aversion picking up. What would be really interesting, and which is entirely possible, is the S&P goes higher, okay, breaks through these highs, triggers all sorts of stops, gets everybody long, squeezes all the shorts. The dollar and the yen still hold and maintain their bid, and then we get a false breakout like this, and then like that. And then if that happens, then you really have to be on the long yen, long dollar bandwagon. At least I will be, and that's what I'll be looking for. So in the event that happens, hopefully you guys are following me just fine. I know it's the weekend, and you're probably not, you're trying to think correlations right now. But what I try to do is I try to take all these puzzle pieces, put them all together, every single day that I trade. So hopefully that did make sense to you guys and gals. Okay, so a few key points that we should walk away with this weekend. The dollar index is in breakout territory, but there are some dollar pairs that don't look great. Some of the commodity currencies, and you understand why the commodity currencies look a little bit better. It's because equities are stronger. Equities are near their all-time highs. You take the S&P, so it's going to naturally keep the Aussie and the Kiwi at bid for now. But I'll tell you what, if equities turn lower, which we were just talking about that chart, if equities turn lower, I would expect the commodity currencies start to weaken, the dollar strengthens, the yen strengthens. Currencies like the Aussie yen, New Zealand yen, Euro yen, those will probably be in the crosshairs of people like myself or anybody else who's looking for some pretty aggressive shorts. And remember, if you want analysis for the rest of these currency pairs, just come over to take your trial of ForexAnalytix. Take a look through all the analysis that we have here. Remember that M is macro, C that you see here is candlestick, BT is basic technical, H is harmonic, EW is Elliott wave. And if you want any of those charts, you just click on the little light there, and then you can see all the different charts and analysis based on and what the analyst was writing based on that analysis type. So guys and gals, my name is Blake Morrow. If you found this video helpful, insightful, entertaining for you guys next week, make sure you click the thumbs up on YouTube. Really helps us out. Always helps my team that's editing and putting together all the charts for you. It makes us all feel better, and encourages us to continue to produce these free videos for you. And yeah, make sure you try us out. Try out ForexAnalytix, and I'll see you on the Face webinar Monday morning. Don't miss those. We have great interviews from a lot of traders and analysts and economists, in our industry, and those interviews are long, and they're free for you every single day. So tune into those. All right, guys and gals, my name is Blake Morrow with ForexAnalytix. Have a wonderful remainder of your weekend.